What's up guys, and welcome back to the channel. In today's video, I'm going to be reviewing two of the best dividend growth ETFs. Yes, this is SCHD versus DGRO, or DGRO as I like to call it. So before we get into that, real quick, let's look at my portfolio. We were down $579.11 for a loss of 1.17%. We're currently at $48,990.35. Let's just see who my biggest losers were. So Microsoft, Southern Company, and my real estate pie drug me down today. And my top three were Merck, Verizon, and Dollar General. Looks like Merck, which was up about 44% last year, continues to rise. And Verizon, my worst performing stock, is also in the green and continues to rise. Now, real quick, looking at my activity, I received a $36.05 dividend from JEPI, and then I had my four buys like normal: Abbott Labs, Dollar General, Lowe's, Medtronic, the four stocks I am buying if you saw my recent video. And guys, with that out of the way, let's get right into this review of SCHD and DGRO. So starting off with SCHD, it is currently at $75.74. Looks like we are in the middle of the 52-week range. However, in the last year, SCHD is down 6.8%, which, as you know, beat the S&P 500. Let's get over here and look at the dividends for SCHD. Now we have a starting dividend yield of 3.36%, which is a decent dividend yield. That's about where I would say you want your portfolio to be at. Around 3.3% is a good point to be at for your portfolio. Now, there's no payout ratio, but we do have an insane 5-year growth rate of 13.74%. And it seems like SCHD's growth rate just continues to grow. And then we have dividend growth, 10 years. Love to see that consistency with such a high growth rate. And you guys are going to see later how incredible that is. So next up, we have DGRO, which is the iShares Core Dividend Growth ETF, currently trading at $49.80. And it's down 10.46% in the last year, which is performing worse than SCHD, but better than the S&P 500. And once again, this stock is also in the middle of the 52-week range. And if we look at the dividends, you can see they have a starting yield of 2.33%, which is less than SCHD, but that's still an all right dividend yield. We've got an annual payout of $1.17, and then a 5-year growth rate, which is really good, 10.61%. A little bit less than SCHD, but honestly, if you can get 10% growth on your stocks, that means your income is going to double after 7 years. And then they've been growing their dividend for about 8 years, which is great to see. That shows consistency. And now let's look at SCHD's fact sheet. Specifically, I want to look at the top 10 holdings. And for reference, SCHD has 101 holdings, and they actually have a 0.06% fee, which means for every $1,000, you're paying $6 in fees, which is not bad at all. And now looking at their top 10 holdings, they've got Merck & Co. at the very top, going on with Pfizer, PepsiCo, Texas Instruments, IBM, Home Depot, Verizon, Amgen, Coca-Cola, and Cisco. And if you notice, they have 3 healthcare stocks: Merck, Pfizer, and Amgen. However, healthcare is their 4th largest sector at 12.5%. So this is actually the majority, if not all, of their healthcare, even though they're in the top 10. And also going over here, the total percentage or total weighting of their top 10 is 40.6%. And as you can see, they have 21.1% of the portfolio is in tech, 20.5% is in financials, 14% is in consumer staples. And if you also notice, there are 0 financial stocks in the top 10. And financials makes up such a large portion of SCHD's holdings that they're really in the lower weighted sections. And next we have consumer staples at 14%, healthcare at 12.5, industrials 11.3, and so on. So some really solid sectors in those top holdings. Next we have DGRO, their top 10. And first of all, DGRO has 446 holdings. So this is a very diverse fund. A lot of people like to talk bad about SCHD because it only has 101 holdings. However, I think 100 holdings is still very diverse. However, DGRO has 446, almost 4.5 times as many holdings as SCHD. And their top 10 is ExxonMobil, JP Morgan, Johnson & Johnson, Microsoft, Apple, Chevron, AbbVie, Pfizer, Procter & Gamble, and Home Depot. And if you've noticed, there's not a lot of crossover between their top 10. However, I did the math on the weightings, and DGRO's top 10 only makes up 26.25% of their portfolio. And the crossover between the top 10 are Pfizer and Home Depot. However, if I go over to page 2, you'll see a lot more companies in the top 10 with SCHD, like Merck, Coca-Cola, Pepsi, Cisco, and Texas Instruments. So there is quite a bit of crossover between SCHD and DGRO. However, it's not a lot. And as I mentioned before, DGRO does have 446 holdings compared to the SCHD's 101. Now, this is always my favorite part, the back test. So we're running 1985 to 2023, or whenever the youngest ETF came about. And we're doing an initial amount of $100,000 because I always do 10, so I wanted to try 100K. And just for reference, if you had $100,000 in SCHD, that would be $600 in fees. For DGRO, that would be $800 in fees. So next, we have dividends reinvesting. We're displaying the dividend income. In Portfolio 1, SCHD, Portfolio 2, DGRO, Portfolio 3, the S&P 500. Now let's see how they compare. So we scroll down. With an initial balance of $100,000, SCHD ends at $243,847. DGRO ends at $227,996, and the S&P 500 comes in at the lowest amount, $216,356, and SCHD was at the top. It was the top performer. And if we look at the best year, the S&P 500 actually had the best year at 31.35%. Then DGRO with 29.88%. And last but not least, SCHD with 29.87%. But if we look at the worst year, the SCHD performed the best at negative 5.56%. Then came DGRO at negative 7.9%. And finally, the S&P 500 with a whopping negative 18.19% for their worst year. And then if you look at the graph, this just starts from, 2015 all the way to the end of 2022. So that's about 8 years, which, as we saw before on Seeking Alpha, DGRO has been growing their dividend for 8 years. So it looks like DGRO was started 8 years ago. And now let's look at these annual returns. So what I want to show you, starting in 2015, the S&P 500 outperformed both of them. Then in 2016, SCHD outperformed both stocks. Next, in 2017, DGRO outperformed. And then in 2018, DGRO outperformed once again. And then from there, the S&P 500 outperformed them in 2019. Once again, the S&P 500 outperforming both of these stocks in 2020, and then in 2021, SCHD just barely outperformed the S&P 500, and the S&P 500 outperformed DGRO. And then this is where things really changed. In 2022, the S&P 500, it says it was down 18.19%, but I think all of these numbers are wrong because I know SCHD, as we saw before, it was down a lot more. So was DGRO, and then the S&P 500 ended just under 20% in the red. But this is where SCHD and DGRO end up outperforming the S&P 500 overall because they had such small declines in 2022 compared to the S&P 500's large decline. And then next up, I want to show you guys the dividend income, which is always my favorite part when we're doing these reviews. So in 2015, SCHD earned $2,910, DGRO earned $2,462, and the S&P 500 earned $2,103. And now remember, SCHD has a 13.74% growth rate. DGRO has a 2.33% or has a 10.61% growth rate. So let's go all the way to 2022. And as you can see, from 2020 to 2022, that's where SCHD really starts growing and breaking away from the pack. So in 2022, SCHD has $8,092 in income. DGRO has $5,247 in income, and the S&P 500 has $3,624 in income. And now I did the math already, but from 2015 to 2022, SCHD increased their dividend income by 2.78 times. DGRO increased their dividend by 2.13 times, and the S&P 500 increased their dividend by 1.72 times. So all of those are really good numbers. However, SCHD had the best dividend income growth at 2.78 times, and I'm really excited to see how this backtest looks in the next 8 years and the next 12 years. You're going to see SCHD's income far surpass anything that the S&P 500 can think of. And we might actually see SCHD and DGRO outperform the S&P 500 over the long term. And with a large part of that just being dividends reinvested. So guys, I want you to tell me SCHD versus DGRO. We've looked at both companies, their dividend yields, their dividend growth rates, their top 10 holdings, their sector weightings. So you tell me. Honestly, I'm going to go with SCHD on this one for the better starting yield, the lower fee, and the higher dividend growth rate, as well as outperforming both the S&P 500 and DGRO. But guys, thank you for watching. Don't forget to like the video and subscribe, and then get your free stuff down below. There are links in the description for Amazon, M1 Finance, and Webull.